the topic that we have picked up. If you look at how the entire process is actually happening, is lot of applications are actually getting changed in secured and unsecured business loans, retail loans. So online applications is changing. What we have seen is people converting physical documents into digital applications at some point of time. There a lot of sanity is coming, and that's what we are seeing. That's where we do a lot of optimization. Automated underwriting process is happening, especially in the retail segment. This is happening a lot because there are a lot of data points available. In the unsecured business loans, especially in the SME, MSME space, we see as the digital infrastructure is evolving, we see a lot of data points coming in. We also have seen in the market, once GST data has been part of India stack, a lot of people building underwriting models using GST data. Onboarding process is improving, especially after the DLG guidelines. We have no clarity on who is an LSP, who wants to stay as a fintech player with an FLDG, skin in the game kind of a thing, and who's a regulated entity, right? So the onboarding processes, quick onboarding is kind of an evolving process. And this is where I think what we are going to do today in the next 45-50 minutes is what we want to cover this onboarding process. How do you simplify this? Go back. And then obviously the documentation, right? Because records and storage of documentation, and also flowing in back the data from onboarding to underwriting to disbursal, and bringing the analytics back for building personas and further underwriting is what is very, very critical. So this is what is happening in the overall digitalization process. Where we have seen in the personal loans, I covered already instant approvals on personal loan side, depending upon the ticket size, personalized offers, self-service portals, all of this actually gaining traction. Credit cards anyway has been very, very active. I mean, I remember early Amex days, at least 20 years back, 15 years back, basis CIBIL, at least bureau score, they used to tell you whether you're eligible or not. So that kind of a swiftness we have always seen in the credit card business. But obviously now with they chasing volumes and values, some of the processors are getting sanity there also. Also with the regulator coming in with a lot of do's and don'ts in the card segment, we might see the onboarding process also evolving and changing with time. Well, now so with that background, let's just look at what's happening in the unsecured business loan space, right? Typically, these are the loans. I hope I've covered most of it. There could be a lot of flavors and varieties to it, but these are broadly the loan types that are there in the market: term loan, lines of credit, merchant cash advance, and so on and so forth. I know there will be a lot of bankers here. If there is anybody, a non-banker or a new age startup who wants to get an understanding of this, please raise your hand. Otherwise, I'm assuming this is broadly known, so we'll kind of move on from this slide. And anybody who wants to, who has a question in between can raise the hand and we'll obviously pick it up. So this is the growth that we have seen in the segment, in the unsecured and unsecured loan segment. So while secured is growing at 11.5%, we see a lot of time and energy going into the unsecured segment. For one reason, there's a humongous amount of players that are there in that segment, right from your street side vendor to a lot of SMEs, MSMEs, manufacturing units and all, who require this unsecured loan in their day-to-day operations. And the entire focus of the nation, the government, I think regulators and the entities is primarily there. Also, a lot of government schemes are in place where up to a certain limit, they basically are asking the entities to to go for approvals. This is one of the areas where we are also in the process of bidding for two large entities who are saying, can you help us build journeys for this government schemes? I think given that RBI and the finance ministry is very focused on the ease norms for public sector banks, this is going to be a very, very key focus area where you will see a lot of public sector banks also investing a lot of time and energy in improving their journeys and process. So regulatory policies, as I said, right, a lot of clarity has come in the last and I would say 6 to 12 months with what the do's and don'ts, the risk weightage norms, the strict underwriting norms, defining the ecosystem players like an LSP to a fintech to an regulated entity, definitions on risk weightages on co-lending, all of that is actually now coming in place. So we see a lot of journeys will actually get changed because of these norms coming in. And this is going to be an evolving process, right? The reason why we picked up is how do you build, unsecured business lending is as and when the data points change, as and when there is a new regulation comes, your onboarding process changes, your underwriting process changes, your disbursal process changes, your collection process changes. So this is something that we have seen in the market, and I'm assuming that we will be doing this more often in the future. On how this every time there is a policy change, we see a lot of people coming and asking us how do I improve my journeys, or how do I course correct my journeys on the fly. So what this will also mean is your selection of platforms, your selection of underwriting tools, your KYC process, all of that needs to be state of art, and then you also should be on ground knowing how you have stitched it, the entire architecture, to ensure that any changes that could happen on the fly. Yeah, so I mean, we all know data is very, very critical for secured, unsecured lending, for even personal loans and everything, right? But in the unsecured space, as the infrastructure improves, as IoT utilization and stuff like that keeps improving, there's going to be a lot of new age data that will come into it, which will definitely have an impact on your underwriting. I see we get a lot of calls where a lot of regulated entities keep asking us, uh, कुछ और data है क्या? Is there more data available in the market? What else we can leverage upon? And that's where we thought we'll have Raghav in this presentation from Equidai. He is one of our accelerator partners, and he has built. He has got his own IoT systems placed in, and he has done a POC with SIDBI. He will talk about what he's doing, what kind of data that is bringing. And this is very, very critical because all of these data points finally will go into your journeys, your processes, your frameworks, so which will basically give a great customer experience, frictionless customer experience for onboarding, underwriting, disbursal, and collections. Raghav, maybe you want to introduce quickly yourself and then tell us what you're doing in this space.
Okay, so hi, good afternoon, everyone.
You're welcome. And anybody has a question, please raise or leave it in the chat box. We'll pick it up as we move forward.
Great. Okay, so everyone, I'm Raghav. I'm the founder of Equidai. I've been working on building this startup, which is an alternative data company, where we try to bring real-time turnover authentication of MSME borrowers for a bank to be able to understand what the actual cash flow of the company they have invested in it. So we are not only taking care of the underwriting journey, but we have built an entire end-to-end digitized stack where you can do all sorts of operations on monitoring of your portfolio, getting some early warning signals, and also doing some recollections via an entire streamlined end-to-end API process. So we have completed a pilot with SIDBI where we have done some software level IoT installations to be able to capture around 20 operational data points of the MSME borrowers, like what is their daily productivity, daily production data, labor attendance, dispatches, and so on. We have built a proprietary algorithm where we don't use this data in silo, but we have a capability where it can be integrated on top of your existing financial and underwriting models to be able to improve your underwriting figures and cross-verify it to be able to authenticate the numbers which are being reported on the audited financials, right? So once we capture this data, we correlate it with the past financial and banking databases to be able to authenticate some financial KPIs, which can then be factored into an underwriting model of a lending institution and help them better assess the borrower's payment capacity to be able to provide them better loans. So this is where we stand out of the market, and this is what we're doing differently to be able to build an alternative data source.
So, Raghav, a quick question to you. You also done some POC, right, with SIDBI. If you can just walk us to what was the objective of SIDBI, what is that they're trying in the segment? You will also have some kind of a interesting facts of what SIDBI is also one of the regulators in the market, right, especially on the lending side. So what is their intent and how do they, what is their scale-up plan for this?
Right. So SIDBI was, largely set up to boost MSME lending, and it has built a very strong loan book, which is largely manufacturing focused. So when we approached their board, the larger problem was that how can we improve the recollections and reduce the delinquencies of the portfolio. So today, most of the banks do have a monitoring system as well as certain compliances through which they manage their advances. So they do a stocks audit statement, and then there are some QIS and regulatory reports which they use to keep a check of their performance of the portfolio. What we did was that largely this process is physical and paper-based, where an auditor would be required to physically visit the factory, prepare a stock audit report, submit it to the bank via the borrower, and then the rest of the risk reports and frameworks kick in. What we did here was that the challenges that we identified was one, that it is a very paper-based and inefficient process, which requires a lot of time and money from both the banks and the SME. And second was that it was solely based on lagging indicators, which means that whenever you're preparing these reports, this is only based on the reported financial income of a customer. But a lot of this business and the income of the customers might not be reported well on their GST and other income sources. So with our system, we brought in the capability where using our IoT sensors, we are able to bring all this data on a real-time basis. That as in when the company is doing a production, we are able to share what the actual expenses and turnover forecast of the company is going to be. Second, if there is a drop in the production facility, we can notify the banks much earlier about a potential delinquency or a stressed account, so that they can start with some recovery, moratorium, or some restructuring process much earlier, and hence improve the liquidity and risk weightages. Finally, we also automate all the stock statement and QIS reporting for them, so the banks can not only save time but also save significant costs on this entire process. So with the current pilot that we did, it was largely focused on the textile industry in the northern part of India. One key insight was that using this alternative data, not only we were able to address all the pain points of the credit managers, but also authenticate the turnover, the real turnover of the companies that the business has invested in. Because most of these businesses that we brought on board had some cash income which was not being, reflecting on the GST and ITR. But using our technology, we were able to tell that additional income and the actual expenses that the companies were incurring and what their margins and serviceability was.
Excellent, excellent. And how much was there any can you share what numbers were disbursed? What was the learnings from that? Something like that. I'll not ask which entities participated and all via SIDBI, but at least what kind of numbers were discussed and what was the end result of it?
Right.
And also maybe you can then say add a couple of lines on how does the entire integration with the loan onboarding when the onboarding process is happening, where does your data come in, and how does it change the entire underwriting process?
Right. Okay, so particularly for this pilot that we did, the customers that we were targeting were in the small segment. That is, they did a minimum capital investment of 2 crores in plant and machinery and had a turnover of more than 10 crores. In the textile industry, the customers that we onboarded had a turnover between 17 to 40 crores, and they had taken a loan of 10 crores from SIDBI in total. One had taken a 3 crores term loan for buying a machinery, and second had taken a working capital loan of around 5.5 crores. So with these customers, when the SIDBI, underwrote them, we came into the picture 6 months after. So the scope of the work was that let's try to authenticate the turnover and performance of these companies and identify any potential delinquencies of these customers. So once the underwriting was done, largely SIDBI looks at the past 2 years balance sheet as well as the GST data of the company, right? And for the term loan, they had also taken the machine invoice for which the loan was given. Now, when the SIDBI built their underwriting model, largely they looked at the turnover, the gross margins, the financial ratios, and also the production capacity of the company, which is largely being used. They were able to predict these turnovers of 17 to 40 crores. But once we onboarded these customers on a platform, we understood that most more than 40% of their income was not being reported on GST and ITR. And hence we were able to bring that as an indicator of additional liquidity and a potential upsell opportunity for SIDBI as a bank to be able to look at these customers for any additional facility that they might require. Second, how we come into the picture is that we have a totally compliant API architecture. We have the capability of integrating into existing LOS, LMS, and core banking systems of a bank to be able to provide us as an additional indicator, which can seamlessly integrate with their existing underwriting model. So if any lending institution is using XYZ data sources to be able to underwrite to their customers, we provide our capability into simple financial KPIs, which can easily be, factored into their underwriting model and helps them to authenticate the values that they are reporting, to be able to make better assessment of the customers and identify any better, dynamics to be able to underwrite better.
Got it. Got it. Also, since your machines, once they deployed, they continue to be there. Would they would also be providing data on an ongoing basis, right? So at a post dispersal, we can always do a correlation with the sales data and this data, to kind of do some early warning kind of a thing. Is it also a capability?
Yes. So not only are we telling you what the turnover and expenses of your customers are, but we have built an entire journey through which you can also do the monitoring performance to make sure that your customers are not stressed and are meeting the financial forecasts that you did while underwriting to them. Second, you can also identify early warning signals. There are some 45 early warning signals which RBI has implemented for the banks, which has largely been done for large ticket size corporate borrowers. But even for MSMEs, we can provide the same capabilities for you. And third, as I mentioned, we also automate your stock statement and QS reports filing. Because on top of a data model, we have the capability to automate your compliances also, which helps you to save cost and time significantly. And with this new data, as you mentioned, it is coming on an ongoing and real-time basis, right? You can identify better seasonality of a borrower. For example, if there's a festive or a season coming up, right, for the borrower, you can understand much better if their production capacity is increasing, hence you can provide them additional facility for upsell. So it's a new business making opportunity to increase the churn of the customer and help them, do a better business with you.
Excellent, excellent. Thank you. Thanks, Raghav, for those insights. So coming back to to our presentation, right? And we have tried to mention here some of the standard stack that is available in the market, which is your PAN, Aadhaar, Udyam registration, and your couple of other APIs in the market. How AA could provide and how tech stack actually helps integrating all of these data points. Along with something which Raghav or there are many other innovators in the market who bring in multitudes of data. So all of that goes into the system, right? Now the challenge where everybody struggles or everybody wants to, I think struggling is the wrong word. I would say everybody wants to be on a continuous improvement mode and giving frictionless experience to the customer is how do you build right journeys. That's something as a capability that we at Digital Fifth have been building over a period. Now, I'll ask Sumit from my team, who actually has been working on some of these interesting projects in the SME lending space. He has worked with one of the largest accounting platform players, making transforming them into an LSP and then doing a lot of tie-ups with lenders in the market, and also has been working on multiple other unsecured lending projects. So he will take you through our vision, our view on how journeys are built and how do you optimize them on a continuous basis to provide a great experience to the customers and also build books. Yeah. So Sumit.
Thank you, Srikanth, and thank you, Raghav. So before moving ahead, I'll try to introduce myself. I have been associated with Digital Fifth from the last 1 year. As Srikanth already mentioned, that I have been working with one of the largest accounting platform to digitize their whole journey for unsecured business, and of course, into a very beautiful lending journey. And we have built the whole product for them, as well as we have improved their form filling process, onboarding process, application process. So before jumping ahead, we'll be sharing a feedback form. Would like to request all the participants to fill the feedback form that will help to improve our webinars content, as well as we'll learn from it what all things our participants need in the coming webinars. So yeah, jumping towards the journey and the impact. Uh, First, I'd like to highlight what the traditional journey looks like. So when we talk about traditional journey, it's of course a papers-based journey. As Raghav was also mentioning, that the traditional journey will the data points will lead towards the more seamless as well as more profitable journey for both lenders as well as for the customer itself. But these are the high-level flow of a traditional journey where the physical document has to be exchanged between the customers to a middle layers and then to the lender itself. And we also do the whole credit evaluation process as well as KYC. That also comes on the branch level itself if the lender is a bank or an NBFC. And then the whole loan approval process do take time. And this loan approval process might take time from maybe around 10 days to maybe 1 month or so. So these are the some setbacks that we have observed during our unsecured journey with one of the lending service provider also. So we have our own approach that we'll cover in the future slide. But what are the main highlight that we were able to eliminate? That was physical document is something that we wanted to eliminate. So we digitize the whole onboarding process, and then we do the whole eKYC as well as video KYC for them, and how the agreement can be signed. So there are various partners where we can onboard them as well for the e-signing process, agreement signing process, and of course how we can showcase the whole key fact statement that has to be go during this whole lending journey process. So of course the Raghav and Shrikant has already mentioned the data points do help, and of course the GST data as well as the account aggregated data that do help during this whole process. And we of course did this whole process again with our client. And what would be the impact of this whole digital journey, be it on the customer side, be it on the lender side? Both this whole journey will improve. Of course it will of course impact on the customer. What will happen there, the user journey will look better, the customer will engage more, there will be low drop downs within this journey, and of course the paperwork would be reduced, and the overall TAT is something that was one of the major focus we had during this whole process. And of course when we're talking about unsecured business loan, it is no collateral is shouldn't be any problem. When we talk about lenders, the more data, it is the better for them to improve the overall risk assessment. They're able to underwrite it properly. They're able to do the whole process or a credit rule engine or a banking rule engine properly. And based on some insights within those data points, they'll be able to provide a get better approval rate as well as better eligible for the customers who are seeking for the loan. So of course, this whole process help both customers end as well as on the lenders end. Moving towards the emerging trends and the opportunities and within the whole banking ecosystem. When we talk about opportunities, we'll also see how this banking as well as fintech partnership is happening within the MSME segment itself. As we can see, Bank of India as well as Lending Card has already been into arrangement of co-lending for the MSM for fulfilling the MSME demands within the India. And we all know the Flexi Loan has already been partnered with RBL Bank, who provide unsecured business loan for the customers. And we all know Paisabazaar is one of the largest marketplace where they have multiple partners and they do whole unsecured as well as secured business loan per se.
We're getting some questions, then we'll
Yeah.
answer in a while. We have more questions to ask.
So we are getting some questions, so we'll try to answer them as we move ahead. And if any members have any queries, they can put them in the chat box as well. So how our approach is towards the unsecured business loan journey and how we, approve it in a proper way. So our digital fifth approach is starts with the current assessment. Then we'll also look at the market study as well as do the whole benchmarking process. And at the end of this current assessment as well as market study, we'll be able to provide a proper documentation over all the data points that we have been able to capture within the market as well as within the clients we are able to study, and we will be able to build a proper report for them. So getting into this, each segment into a deep dive in the coming slide. So how do we do the whole current assessment process? We'll try to understand your market product dynamic first. We'll try to understand whether your product is scalable or not at first, and we'll try to understand the positioning of the product itself. And then what we'll do, we'll define the whole parameters. Like maybe your lending journey is very traditional also. So we'll try to understand what all parameters that you have been asking for this whole lending journey. We'll try to assign them whether it's required or not. And we'll also try to understand the markets, what all your competitors are providing, whether they are providing a detailed onboarding report, process form as well, or a detailed parameters that need to be taken care of. And we'll try to understand within a proper Excel report whether you are lacking or whether your process is better or not. Similarly, when we do the market assessment, we'll try to understand the competitors, whether it's bank or whether it's NBFC. We'll try to understand what all the highlights they are providing, first of all, within this whole unsecured business loan lending journey, if we are taking into consideration the unsecured business loan itself, and what are the gaps we can see from your process as well as from the market process. And based on the gaps, we'll try to build the whole scoring matrix, which will provide a deeper view for our client to understand what they are lacking, in which all domains they are lacking, and which all domains they have been improved or may have to improve. And similarly, we'll try to build the whole detailed documents of each segments. That is, we'll try to build the whole logic diagram for them, the whole data flow diagrams. Apart from that, we'll also build the Figma journeys for them. And we'll also try to collate the whole business requirement document and functional required document that helps to the backend team, the developers and the tech team, to understand and build the whole front end journey, as well as we'll try to build the whole SOPs for the product team so that they'll able to understand better. So we'll deep down on each of the segment in detail in the coming slide.
So there is a question, Raghav, I think that has come to you. Somebody is asking, what are the, Raghav has mentioned manufacturers had a lot of, flow outside of GST. From a business point of view, what are these cash flows and what, and was business okay to share it?
Yeah, so this is just the unreported income which the manufacturer might not report accurately on the GST and financials. We take the consent from the user whenever they're being onboarded on the platform. The consent is taken on behalf of the bank itself. The data is directly shared with the bank so that users don't have a problem, and we adhere to the required regulatory guidelines to be able to take a digital consent from the user whenever we are sharing this data with the bank. So as long as the bank mandates the users, the customers don't really, have a problem, because India is traditionally a credit starved market where I don't see a lot of MSMEs negotiating on loan contract loans with the banks. And at the same time, most of the businesses today are realizing they need to formalize their business. You might have seen that, many businesses are today formalizing and filing for GST. The GST collections are growing every month, breaking records and so on. So I think a lot of businesses do realize that they need to formalize, and as long as banks fund them to be able to incentivize them to formalize, right? Because you can't pay a bank back in cash. You'll have to formalize your business and pay the bank back. That is where we come in to be able to bridge that gap and that trust deficit, to be able to share that authentic details with the banks and help them for invest in the formalization of the business.
Perfect. Also, just to add to what Raghav said, right, it also depends upon at what stage of the journey is the organization or the manufacturer, right? Initial days, you would be happy to provide this kind of data in the absence of GST, and, in the absence of a 6 months or a 12 months or an 18, 24 months GST data that is there. Finally, it's a question of cash flows, what you have manufactured versus what you have sold versus what you have recovered. For us to do a lot of build any kind of analytics on the top of it, it takes time. So that's where your real-time data from the manufacturer actually helps in better underwriting. That's where a lot of your NTVs would come into the system. ETBs could be, I mean, when I say NTB is new to business, ETBs you are existing to business. Further, incremental, delta on your current loan exposures and everything could happen through GST. So this is where anybody who's launching a new product in this segment and is looking to gather a lot of new customers rather than trying to outbid the existing lender, the loan, the borrower from other financial institutions by trying to do a loan arbitrage. These data points will actually help you in bringing a lot of new SMEs, MSMEs into the system. Yeah, Sumit, I think you can continue.
Thank you, Srikanth. Thank you, Raghav. So as we were moving ahead with our digital fifth approach, at the end of this whole process, current assessment as well as market understanding, we'll be able to build the whole reports as well as come up with a recommendation to our clients, where we'll able to get the whole data flow diagram. When we talk about data flow diagram, it's basically a logic diagram within this whole lending journey. What all data need to be required, what all screens should be embedded, and what all the front end would look like, a front end logic would look like. When you talk about application flowing from post credit rule engine, how the credit rule engine logic has been written, and what will happen if credit rule engine rejects the offer or credit rule engine accepts the offer. So all this process will define it properly within this whole data flow diagram, as well as we'll try to collate it with the API integration that is required at the backend. So this is how we deep down into this whole process journey, and we'll try to collate this whole process within the data flow diagram for our client. Apart from that, we also build the front end for the customers, where based on the data flow diagram that I've already showed to you, we'll able to build the whole front end journey. And this data flow diagram will help us to give the logic for the front end journey, and we'll able to showcase what screen should be look like and what screen should be come next within this whole process. Similarly,
yeah, for all those who have joined, you have shared the feedback form in the chat box. So while you consume the content, please take some time out to share your feedback on the content and the quality and what more you want us to cover in the coming webinars. We'll be and the deck will be shared with those who share the feedback. So please share your feedback. Thank you.
so basically, when we are talking about the front end journey, so we do the whole Figma journey for the customers, and similarly, we build the whole business requirement document. So when business requirement document actually works across, so basically a developer who is at the IT team wanted to understand what all logics will be written within those whole coding process, within the whole coding languages. So this comes into places. So we help the developer team as well to write the whole business requirement document as well as functional requirement document, which will be embedded for the backend of this whole journey. Apart from that, detailed SOPs will be written for our customers to understand what all data points are required within the each touch points, and what will happen within this whole journey itself. So during this whole process, apart from the recommendation per se, we also build the whole reporting structure that I have already mentioned within this whole deck. This helps our clients to detail out the whole process and able to understand what all things need to be done across each data points or each touch points. During this whole journey, we're able to impact the overall business as well as overall tech stack of our client and improve the efficiency of our loan journey. We'll try to understand how our benchmarking process will able to impact the ecosystem of our client itself. When we talk about how it impacts our tech stack, so of course the data and data accuracy improvement of course happens, where based on the data that we have already been speaking about, we're able to give real-time validation for our customers. We're able to better do the risk management process and better underwriting process and reduce the overall error. When we talk about scalability, so based on the various integration that has been happening within this process, we're able to scale, optimize the whole tech stack that is able to scale in future if required. Like there are multiple integrations that might happen in coming future also, based on some regulatory changes, based on some improvement that volume based changes are required. So a tech stack need to be scalable enough so that able to integrate multiple processes. And when we talk about security and compliances, this is something that need to be taken care at the back end itself, so that there is no data leakages or data discrepancy within this whole journey process at the back end of any lender or a financial institution. Similarly, integration and flexibility is something that need to be taken care, because when we talk about the volume or the transaction that has been happening within those API calls, that need to be taken into consideration when we talk about the overall tech stack. So not only the tech stack has been impacted within this whole benchmarking, we also talk about the balance sheet, how the balance sheet of the overall financial institution will be impacted during this whole benchmarking process. Of course, the API costing will be considered, what all API call will be there during this whole journey. Of course, for the happy flow as well as for unhappy flow, and of course for various permutation combinations cases will be taken into consideration during this whole API call process, and we'll able to understand what all costing will be required for each APIs for a bunch of loan. If we consider 5,000 of loan been passed through, so what is the cost of API calls that has been considered for each journey touch points? And similarly, we'll able to understand the dropouts rate at each touch points. This will optimize the overall cost of journey, as well as we'll also able to understand how we can improvise on the cross sell opportunities, given that we'll able to understand what are touch points the dropouts is happening and what all touch points the customer is getting more engaged. And since we're able to optimize the whole cost of APIs as well as cost of dropouts as well as various touch points, we'll able to impact the overall PNL of the financial institution as well.
Yeah, just to add here, interestingly, we've been hearing a lot of we are actually part of a lot of conversations here where now customers are actually looking from a marketing standpoint and also tracking drop-offs from the source, not from the origination platform, level. From where they have been sourcing this customer in an external environment in the marketing place. So a lot of entities have CRM products and all through which some of the processes actually tracked. So a lot of people are now actually very seriously focusing on these drop-offs, touch points and drop-offs, and how the user journeys are actually built there to ensure there is again less friction. Again, we have one more question. Somebody has asked, what all business loan products are digitized so far? So primarily, I think in the unsecured segment, almost every product has been attempted. Some conservative players are still looking at taking, doing an assisted mode where you enter there, any of so the first touch point could be their website where you go there and then you leave your name and number and you get a call. From an RM visit, the assisted mode or it actually starts. So it's mostly a tab-based journey where the RM actually visits you and then your entire process starts from there. But we have also seen a lot of entities, especially on the NBFC side, who are taking this entire journeys very seriously and then digitizing most part of it. Criticality is again where data is not readily available and where you have broken journeys. But I think as infrastructure improves, you will see. So most of your supply chain management to your term loans, your working capital loans, all of that is what we have seen is actually digitized or being attempted to digitize in a specific manner. Yes, sir.
So we were discussing about the impact of our benchmarking process itself. So post benchmark balance sheet also, it impacts the overall efficiency and the productivity. So why we are doing this whole benchmarking activities for our clients? Basically, we'll try to improve the overall turnaround time, since we are able to understand within the journey what all the redundant activities are there, what all mandatory activities are there, where our customers are dropping most of the time, and try to understand the time taking process, whether it's digital or whether the document that we are asking, whether it can be digitized or not, or it's very physical. So within those understanding process, we'll be able to understand our customers over improving the overall turnaround time. And since we already talked about on the data side pretty much, so with the help of the data, we'll able to do the most decisioning process, and we'll able to do the whole underwriting process itself. And at the third point, we have digital maturity analysis. Of course, the digital maturity analysis will improve during this whole process as most of the data are coming digitally. This will reduce the overall turnaround time as well as improve the maturity of the whole digital business itself. Cost reduction, as we already talked, cost reduction will happen. Just we'll able to optimize the whole API calls as well as optimize the various touch points. And risk management is something we have already talked about. That is how, with the help of the digital data, we can do the whole underwriting model, which is of course been done partially. In many cases, there have been like bank statement, account aggregator is one of the framework that came into picture that helped this whole banking underwriting process in a better way. And in future also, we'll be able to do more innovation with this whole GST data coming play, and other data are coming place, as Raghav also already mentioned how he's using those IoT devices in the manufacturing segment. So all this innovation will lead up to the better efficiency and the productivity of the lending journey, and it will overall impact our ecosystem as well.
So I think so. We have one more question. This is up your alley. You should answer this. How do you select digital lending platforms? Because your entire journey and everything will be this is the power of the platform.
Sure. So when we talk about how to improvise the whole digital lending platform, so as we were discussing, we wanted to understand how this platform works, whether it's positioned properly or not within the what all products you are serving. And we'll try to understand the parameters, first of all, what all parameters that been asked within this whole lending journey. And with the help of the parameter, we'll try to understand what is being asked within the market itself. And we have to optimize, of course, when we talk about a platform, how do we optimize it, whether the backend integration are that stringent or that process is very live a lot. And then we'll be able to understand this whole process, provide the whole digital lending platform.
So, Raghav, a question to you. When you would, going forward, when you try to integrate it with the lenders platforms, what kind of a flexibility do you want to see in those platforms? I'm sure that would be a larger challenge that you will get, right? Or your business model could be also through the platform players. It could also be through the to the lenders.
Right. So I think there has to be flexibility in the kind of way the data is being managed. I think most of the platforms which are going to go and integrate with banks or NBFCs will require to go through some security compliances. So as long as they are getting those certifications in place, and they are following all the necessary security checks, which are still not to a large extent standardized, I think there is still room for a lot of innovation. Any new platform that we try to tie up with, we already see what kind of markets that they open us to, and what is the part of journeys that they have integrated with the banks. Like what all journeys and what all product offerings are they already offering in line with the bank, and what is the growth potential with them. That is, I think, largely the considerations that we take into place. But I think it is also more about what kind of analytics engines are they running. Most of the time, the data is sitting in silos. The banks have access to their own databases. The platform ends up, building their own data copies, which is, very hard to manage and make sure that both the databases are consistent. So I think unless the analytics engine are able to, solve for these data silos, there will always be a condition where you will hit a certain roadblock moving ahead, and it will always act as a bottleneck. So we always look to work with platforms which are very, very sure on how the data is going to be maintained and scaled from a future perspective.
So how do you see this entire underwriting score process evolving in future, right? I mean, GST is something which is already set in. There is post-manufacturing, post-sales, and then post-collection data. You think some kind of a hybrid score can be developed using your IoT machines, your productivity, pre-sales kind of a score with the kind of projections or the purchase orders that a unit might have. So can we develop some kind of better underwriting scores? Is that something that you are envisaging in future?
Yeah, I mean, the larger vision of the platform is to create a scoring standard to streamline commercial lending. So yes, I think with all the existing data points which are available with the banks today, the idea is to provide them more alternative data points, which integrates with their underwriting models and also tries to create a standardized score. And as long as you're able to get on board multiple lenders, you have more room to be able to build intelligence from their underwriting models and rule engines to be able to create a scoring model which can be used for different banks and lending players to be able to identify new opportunities and similar customers in the markets which might be still untapped. So yeah, I think using alternate data models to create a standardized hybrid scoring model is very much a possibility which fintechs are set to explore today.
Yeah, I mean, my take on this is as long as you have a very rock solid, information coming from the manufacturing unit along with the purchase orders or the demand that I have. If I can create an underwriting model using these two data rather than looking at the past 12 months, because ultimately, am I able to meet the demand and is the machines running in equal capacity, for the X number of hours to ensure that the demand is met. I think that would be a great, metrics to have so that, better underwriting can be thought through.
Definitely. And it is also about, the ease and the time to which the creditors provide to the end customer. Today, if a customer has to go to a bank, it will, largely take him 2 weeks to anywhere from a month to or 2 months to be able to get a loan. As long as you can standardize and build a scoring model with this data, we know that it is good enough, it is logical. Manufacturers can get much more access to easy loans to be able to, scale their operations. And it can be a good market app opportunity for lending institutions too.
So, anybody from the attendees, any other questions, we are here to answer. Otherwise, we have come to the end of the session. I also want to introduce our FinTech Grad offering, right? So, what we are doing right now is most of these webinars are hosted on Zoom. We'll be soon moving on to Zoom again. The platform will still remain Zoom, but it will be part of our online FinTech Grad platform where our webinars, trainings, exclusive content, everything will be hosted. So maybe you want to take note of the destination and check out our website. But that said, we are still here, myself, Sumit and Raghav. Any more questions? We are happy to answer. Otherwise, we have come to the end of the presentation. I think a lot of people are facing month-end stress. So if none, then we'll close the presentation for the day. Thank you all for joining us. Thank you, Raghav, for your time and for your inputs. We'll stay connected. Thank you.